Nothing's wrong with your audio. Sorry, I'm just reading. Good morning, everybody. Kind of got a busy day, all things considered. We're going to get the FOMC minutes today, and we're going to get some data on durable goods orders, building permits, housing starts, all that good stuff. We got the 20-year bond, which is one of my favorites. I know we're not supposed to have favorites, but, I think it'll be all right. There was a little bit of talk about Christine Lagarde this morning and the possibility of her um, stepping down or moving out of the position that she was in. I didn't quite catch it all, so don't quote me on that. Maybe find some headlines that talk about Christine Lagarde and changes to the status quo, because that's really what we want to focus on, right? Changes to the system. Anything that changes the system, we want to be aware of it in advance, even if we don't exactly have an outcome lined out yet, because it's not like we know behind the scenes stuff. Small caps are basically flat, along with Japan, then the Dow, the S&P, and the Nasdaq leading the way. Not quite at a 0.5% yet, but it is in the green. It's one of the drum beats that I've been hearing all morning is, hey, the market's back up, dip buyers are here, blah, blah, blah. Yes, just to remind people of what we talked about yesterday, China is closed. We covered this Friday, we covered it yesterday. I guess we'll just continue to cover it every day until it starts to sink in. China is closed this week, and after this, we'll get into the two parties. It's their uh, big event that they run every year and where they make a lot of decisions that affect the companies over there. So it's kind of a big deal. Last year, they took a front run on it, and the ADRs, they really don't profit as much as the home country's companies. That's a tongue twister. But they do benefit, right? Don't make a mistake on that. They do benefit, just not as well. So one of the brokers that are designed to really help take advantage of that, even though I can't stand them and I don't use them, would be IBKR. So if you do like trading other countries, that's something to consider. Could probably dig in a little bit with this Michelle Bowman, see where she's speaking at, if it's pre-recorded, if it's likely to produce any waves. Scratch that one off, and all we have left is the 2 o'clock Fed minutes. Now, there's always some new guy who thinks that this is actually FOMC. It's not. It's just the minutes, which on the one hand, we already know the decision, right? Because this is what was tallied and recorded from the FOMC meeting that we had. But on the other hand, there is still data that we don't know about that will be in these minutes notes. A lot of it is sort of the warm, fuzzy feeling, seeing if everybody was on board, if they all agreed, or if there was dissent, how much dissent, if there was talk about changes to the system and what they need to see before those changes are going to be put into effect. That could be in there. So there's a lot of little bits and pieces and nuances to the minutes that we'll know at the end of the day compared to, this morning without having it. But it's not FOMC. That's the main thing to understand if you're new to trading. We're running on autopilot. So it's likely we're not going to see some wow data in there that we didn't already know, right? But you never know until you look. Right now, the market's trying to figure out if we're going to get the 1 to 2 cuts that the Fed is projecting or the 2 to 3 cuts that the market is projecting. Anything that causes them to unwind or price in a rate cut is going to radically alter the landscape of the market, and that's what we want to look for when we're poking around in the data. The subtle changes like this, where we went from 44 to 45, it's not a big deal. No reason to get hung up on that. We're looking for drastic alterations to the current landscape. It won't be subtle, right? It will be shock and awe, and you won't miss it unless you just don't look at all. All right, so the buy the dip that Bloomberg was talking about this morning started yesterday with that 1.9% rally. Of course, they were rallying off the lows, so they only finished, about 1/4% higher from where they started. But it goes to the idea that we did get that turnaround Tuesday, right? Even though technically it was a Monday. So we're still running status quo, right? All things considered. We have moderate risk today coming out of the White House. It's not really big at the moment. Of course, that could change, but we can't anticipate those changes. What's on the schedule has a moderate level of risk. That's what we want to roll with this morning. So one of the things that we want to continue to parse out is if this reversal off the lows yesterday in the mega cap and everything else, is it a part of a new rotation back into software and Mag 7 constituents and then the rally back up? Or is this more of just a dead cat bounce style turn and that we're going to run up into resistance and then fall down and break lower than the previous low? One of the data pieces that came out is the 13F filing. If you haven't found any articles that dig into that yet, it's probably worth a look. They're showing this old man here. Don't worry about that. It's not just about him, right? Plus, he's done. It's his company that really hit the news this morning with their transition out of Amazon. And it's not that, but it's the top 13F filings, digging around into the institution's holdings and where they were positioning where they stayed solid, and the headline gives it away: unwavering AI focus, and then diverging tech bets. So you don't necessarily need this article. Any article that really digs into the top filings and reaffirms that stance in AI is the headline, right? There's always this doubt on whether or not the AI trade is starting to slow down, or if people are becoming burned out on it, if the capex is just becoming too much. So you want to keep track of those kind of headlines. Just a second. That ain't right. Yeah, it is right. It's right off their website, so it's not me. The data is from 2 days ago. I thought maybe I had made a mistake, but that is right off of their website, so it's not me. They're just having issues this morning. So keep your eye out. I will post a new one if they update this. Sometimes they'll come in and give us an update after the market opens. We'll just keep an eye on that. $96,000 in the overnight, so they were in there participating. Even with Asian market closed, we still are above average in the volume. We have an inside day breakout with a Busby. Just want to see if we can get that to stick. So the concern at the moment is this lower high and this higher low. Now, technically, we're still sitting inside of yesterday's range, and today isn't closed yet. So we don't know that this is going to be a higher low or not. We're making a bit of an assumption, which is okay as long as we approach it with the idea that this is a work in progress and that today's bar is not closed, and so our analysis is not set in stone because things can change today. Start with the idea that we are above the close, and whether or not we get to keep this inside day breakout or not, we have to at least close higher than yesterday. So we have to stay inside this. We don't want to break out to the downside here at all. If we get below 6,800, it's very likely we're going to re-challenge 6,750. And we might be able to get underneath it this time. We are developing a complex topping pattern. And if this is going to be a higher low, say we continue to rally up and push higher, then that will validate this low. That'll be the higher low. we'll then need to come back up to 7,000 and see what we do with this top up here. An equal high or a new high greater than this previous high will continue the complex topping pattern, and we'll be able to aim for 70.32 cog line or 70.50, get above this previous high. If we fail to get an equal high or a new high at that 70.11 cog line, then it's going to reaffirm the idea that we're developing into a wedge. So that's price compression. We don't know yet, right? That's what we want to focus on. If this does form compression, then it's just winding up, more and more energy for a big move. Now, there's no bias to that statement, right? Big move. Up, down, I don't care. This isn't about giving us a directional bias. It's just about the discussion of inertia, energy, and the ability of price to make a move. But the component that goes with that is when price does make that move, is it going to move with energy behind it? Which means as it moves, it's slowing down, it's burning through that energy. Or is it making the move and building up more energy as it moves? If you haven't heard the analogy before, it's the analogy of taking a ball out in the yard and playing catch with the kids. You throw the ball, you put energy behind it. As the ball moves, it slows. It eventually falls, hits the ground if nobody catches it. Take a ball and drop it off of a tall building. As it falls, it picks up energy. Same ball, just a different move, right? One with energy behind it, one moving to get energy. So when price moves, we want to be able to figure out which one of those is happening. So today's focus is getting outside of yesterday's price. That's step one. And then keeping it, which is step two. If we can get outside on the upside and close above yesterday's high, then it will reaffirm that this higher low is legit, and we'll focus on where that leads us next, which is back up above 69.50, 69.60 to see what we're going to do up here. Set in a lower high, an equal high, or a higher high. But if we fail to get this breakout and keep it, then we want to focus on yesterday's range and what it has to offer. Yesterday's mid, yesterday's close, and then yesterday's low. So we got some levels in play to the downside. We just got to get in there if it all starts to unravel, right? When you get an inside day breakout, by the way, you don't want to give it up. It's not good to give up an inside day breakout. We can get it back again, but it's a lot harder the second time or even the third or fourth time, right? We've had that happen in the past. And it wasn't like we just wicked out a little bit and came back in. Those are the ones that fail most often, and then we can come back later and do it again. When we get completely outside of the range and we stay outside the range for a couple of hours and then we come back in, it's a lot harder to get back out that door again. So I don't want to say that it's not possible because, price can do whatever the hell it wants, but that's the struggle at the moment. On the push up, we hit the 10-day moving average. That's what we rejected off of. We can see it right there, 69.03. And on the fade back, we are interacting with the 3-day moving average. All of this is a continuation from Friday, which you can see here. We wicked outside of that yesterday with a nice reversal off of the lows just from the measured move standpoint. It's likely that we'll reciprocate on the other side. We didn't get a matching push. If we had, we very likely would have tagged that 69.11 ADR half up there, but we got close. It seems like we're saying that a lot lately, that we get close to these ADRs without actually hitting these ADRs. But that's fine because we had some big moves, and so that has expanded our ADR levels considerably, right? We went from like a 69 or a 71 ADR. Now we're at 101, almost 102. There's our Globex mid. Get below that to challenge the Globex low. Then yesterday's RTH low. The Globex low is 68.48. Let's just call it 68.50 for the mid, or for the low. The mid, 68.75. Just round it, right? It's close enough. So we're lined out relatively well for a downside move. We got all of our targets. The levels are laid out nice. The midpoint of yesterday is around 68.32 cog line. It's a little higher than that, but close enough. Right, there's 32. And the push to the upside this morning, it's not dead on perfect, but it is the round number 6,900. So if we make a move back to the upside, get through the roundy, 69.11 cog line, and then we've got the full ADR 69.65. So we got levels in both directions. All we got to do is get that breakout started, right? And to the downside, same thing. Split the mid, get to the Globex low. Yesterday's mid, 68.11 ADR, and then the full low of yesterday, 67.92 cog line. And then the ADR to the downside, 67.60. Level by level by level. Doesn't matter which way we go, we got our targets. Now we've been maintaining this range since Friday. So we're still stuck with this, right? We have to get out of this box. I don't think today's going to be the day to get that done. But it's possible this afternoon, right? The FOMC minutes could reveal something that finally gives the market a little bit of confidence and we push. Or the minutes come out and steals some confidence away from the market and we fade. That's always possible, right? Today's floor pivot is lower than yesterday's. That's bearish. Price opened above it. That's bullish. And we haven't hit it yet. And that makes it a MDP. The problem is we can't count it as a missed daily pivot until tomorrow. So we have to make it through the whole day without hitting it. And then look back tomorrow and say, hey, we never hit that pivot yesterday. Today's channel is wider than yesterday. It's okay. I mean, it's a little wide. Wide channels imply that if we get a breakout, it doesn't stick. And so far, that's what happened. We got our breakout, we wasn't able to keep it, and we came back inside again. The purple line up here is the weekly floor pivot. We got above it momentarily, wasn't able to keep it. Now we're underneath it. And the weekly channel is what we are negotiating with. We didn't get to the top of that channel, which is 69.11 cog line. And so far, we're holding above the low end of that channel, 68.70. So that's our range to deal with. Generically speaking, we're bullish above the weekly pivot and we're bearish below the weekly pivot. It is worth noting that the floor pivots are still working their way lower, but the distance between each pivot is reduced significantly, right? Between yesterday's floor pivot and today's floor pivot, it's a lot narrower. Now, granted, we didn't get one on Monday, so the difference from Friday to Tuesday, it looks really big, but it wasn't really that big, right? There was something in the middle of those two. But look at the difference between, say, Wednesday and Thursday, which wasn't much of a gap, and then Thursday and Friday, which was a significant gap. So we keep putting in these lower floor pivots, which means the previous day's calculations continue to be lower and lower and lower. Yesterday was a sideways day, and we still got a lower floor pivot from that calculation. So if we don't break the low today, say we hold the mid of yesterday or even break back outside of yesterday to the upside, it's very likely that tomorrow is going to be the first day of higher floor pivots. It'll be a nice transition, right? Because then we'll be starting the process of turning everything over to come back the other way. It doesn't have to work out that way, but indexes are mean reverting, and it's very likely we're not going to continue the move to the downside unless we get some very creative negative news, something big, right? Shock and awe, just completely wipes out all confidence and breaks the mold and gets us moving lower. What the heck would be that big? I don't know. There's nothing on the calendar that big. We've already reached R1 this morning. So from the daily floor pivot, we've got R1 and S1. They're a little tighter than the average daily range, the ADRs. So we'll interact with those before we interact with those ADR lines. We've already made R1. There is a floor pivot analysis that focuses on an R1 to an S2. Well, S2 would be down here, 67.50. Imagine that same old number that we've been focused on. Now, when it comes to an R1 S2, that usually is a focus on a market that had already been working its way down and is getting an upward move before the next move down, right? Kind of like that dead cat bounce that we were talking about earlier. So we could get this push up into that R1 before dropping down into the S2 if it's a part of this continued move to the downside where we get this drop. Now we're making our leg up before the next drop. And if that's the case, to measure out what the level of the next pause would be, we just measure this leg. That's straight out of the textbooks, right? Price analysis 101 sort of thing. So that's simple enough. Just snap a line. Looks like about 3%. Just set it down there. 3% would get us below the 200-day moving average and get into 65.50 or 6,600. I think I like that better. Come in a little light. I'm not saying we're going down there. Not even saying we're going to go down. But if we are looking at a rollover, And if this is the start of a move lower, then that's the measured move targets, right? That's the next stopping point. That would not necessarily be a bad thing, by the way. I know it might seem that way, but we've been in this range for a long time now. And at some point, something has to give. So if we can get out of this range and break the mold, then we could perhaps finally start our way back up through it and through the other side of it. Right? We got to wash it all out at some point. So let's get her done. For today, we want to focus on the floor pivots. If we break through the Globex mid, then we want to focus on the Globex low, which is really close to that daily floor pivot. If we get to the Globex low, I don't see how we could avoid hitting the floor pivot at that point. Then we would want to focus on getting outside of the channel for that floor pivot. And then S1, 6811 cog line, and then yesterday's low. Really nice distribution started this week. Well, actually, to be fair, it started last week. We're just continuing it, right? But this is a really good example of a classic distribution. We've already expanded outside of the value area, testing that high end. Before this morning, like if you were looking at this yesterday afternoon, it was nearly perfect, right? Because this little bump up here on the top wasn't there yet. If we get a break above this Globex high that we've put in, it's a shallow area and we could move through that area relatively easy. I'm kind of surprised that we hit a speed bump at all, really, but I guess it is the upper edge of last week's distribution. So a little bit of remnants from last week, fine, whatever. Get through that 6,900. It looks like we've got a nice clear path to 6,950. Doesn't mean that we'll be able to get through this next zone. We could just hit our head on it, roll over, and come crashing back down again. But it does have the shallow area. We could move through that really swiftly, and then we'll challenge whatever's on the other side of it. Ten-day, 30-minute volume profile and TPO. The point of control on both of these are lined up. It did shift down. Remember, it was up here earlier, and now it's underneath us. I'd like to keep that, but they didn't ask me. So this is what we want to focus on. That's what we've been focusing on, right? Friday is the day that set the range, so it's the boss. We got to get outside of that. Really, it would just tighten that up a little bit, right? So that's what we got to get out of. To the upside, you can see that shallow area. And then we've got that big event bar from back here, right? Which is that other zone that we was looking at. So shallow areas, generally speaking, we move through those relatively easy. 69.42 is an old school cog line, but it's worth keeping your eye on if we do get that breakout and that push to the upside. You got the 32 cog, but you also got a 40 level, right? 42. It's an old one. We don't use it anymore, but it's still there. All right, we are done with that level of interest now. Take that off. We don't have a new VPOC from yesterday because we've already crossed through that zone multiple times. And this morning, our profiles are just one big mess. We got disagreement between the value areas and disagreement between the point of control. And we got multiple distributions scattered all over the place. It's nasty. Right now, the Globex low seems to have the most control, or the Globex mid. So we really want to focus on that. I think if we lose the mid, I think we lose the Globex. All right, for the week, everything is looking good. We haven't challenged the upper edge. We haven't gone anywhere, so it's not a surprise. We're still sitting inside of Friday's range, so we got nothing. Got to get out of the box, right? We just got to get out of the box. We are below the 10-week still, but just barely. In fact, I got to zoom in for us to even be able to see it. Right there, the orange one, not the yellow one. Although I guess they're both orange. The darker orange. So we're just barely under there, but we're at the 10-week. It's how we want to focus on it. If we expand below 1%, or if we expand above 1%, that would change our approach. But at the moment, if we're this close to the 10, we can get stuck there and spend a couple of days looking for a catalyst that can finally get us out of that orbit. We are 0.25% below the 10-day, so this wasn't a one and done. Now that we've been working our way back up, we just want to continue that transition, but we could get the same thing all the way back up through the 10-day and all the way up to 1% on the other side, right? Just be reciprocating what we had down here up there. But that still implies that we're working our way up. Be careful that we don't come up and reject that 10-day and then start the process of moving back down again. We've got examples of that in the past where we were below the 10 and we came up and checked it, and then we dropped lower again, came up and checked it, dropped lower again. You get the idea, right? So just because we're coming back up into that 10-day doesn't mean we're actually going to be able to get through the 10, or that we'll keep it even if we do. We were below it and then above it and then below it and above it and below it and above it. You get the idea, right? And this is what we've been doing since December, which is nothing, sitting in this really big wide range. So we're not looking to change all of that today. We're just looking to get through that 10-day and begin the expansion above it without getting stuck in it. Looking at what's down this morning, Nat Gas, Mag 7 down volume is down. Now the down volume was up almost 12.5% in a 5-day period. So, after being up 12.5%, it's kind of due for a little bit of a pullback. We're seeing that pullback this morning. So that's a double negative. which means it's good for us. Bitcoin is down, but not enough. We need to see more. It needs to be 0.5% before we really want to focus on that. And nat gas, which isn't anything we need to worry about anyways. Looking at what's up this morning, the China ADRs, uranium, energy, metals and mining, China chips, gold miners, uranium again, junior gold miners. So we got precious metals, the Mag 7, China all pushing to the upside, up more than 0.5%. And we've got some other good stuff moving in the right direction, but it hasn't moved enough, right? We want to focus on getting more out of those. We don't have a high correlation coefficient yet. I know it's big talk early in the morning. Every day when we're looking for the opportunity to see the S&P break out, we want to focus on what could cause that breakout, right? Sometimes that's dealer positioning. Sometimes it's 0-day flows. A lot of times it's the Mag 7 and market breadth, right? Other stocks contributing to the push. Then it could be bonds and yields, commodities, FX markets. We never quite know, right? So if we're going to see the Mag 7 continue its push and that push starts a rising tide, then we could see a market breadth and we could get that breakout to the upside that really helps fuel this drive back up into 7,000. But I don't know if there's enough trust in the Mag 7 alone for it to be only the Mag 7 that gives us that push today. We're going to very likely need the rest of the market to pitch in and help. So we do want to check for that rising tide scenario. Now we got the VIX back below 20. It's a good start, but we need that to continue to the downside. And we got hung up around 19 on Friday. So that's the level that we want to focus on. Get that VIX below 19. If we bounce off of 19 and start to rise, that's going to destroy any opportunity for that breakout rally day to the upside to hold and for us to keep it, right? So right now the VIX is fading. That's going to assist with the breakout. But if we're going to keep it, we can't have that VIX bounce off of a key level and start to rise, because that'll shut it down, right? So keep your eye on the VIX. See if it offers any clues today. Sometimes the VIX has no value, right? That's just the way it is. Sometimes it's just worthless. But this is not one of those times. So keep your eye on the VIX. 19 is the key level. But there's a level like around 1930, 1925. It's where the previous bounce was we were just looking at. So we got to, level by level. Be prepared for today to stay inside this range. Just like yesterday. We might wick outside of it, expand a little bit above it or below it. But if the market doesn't get what it's looking for today, we could very well put in yet again another day inside this range. And the thing is, that's not necessarily a bad thing. So I'm looking for a TRB setup, trendline breakover. What makes those really good is that we make it back to the top of the zone in a single bar, which is really awesome. This was a multiple bar approach, right? It took days to get back up there. This was almost made the whole move in a single day, but it was inside of another big day, right? So that didn't have a lot of excitement either. Right now, we're trapped inside of Friday's range, which, to be fair, Friday was not exactly the narrowest candle out there, but it's certainly better than these two beasts. So if we do start that process and get through the 10-day and begin that push up, we could get to 7,000 today, right? Which is awesome. It's like 115 points away. I would like that better if we spent yet one more day down here, maybe retested the 6,800 area, and then make a run for it, right? That would certainly be better and line us up closer for the end of the week. Otherwise, if we don't get a TRB, we could still get a cup. So we spend a little while down there and work our way back up. Or we could end up with a V where we get, multiple days and we grind our way back up there. So even if we don't get the TRB, it doesn't mean we can't get back up to that 7,000. We would just be looking for another process to get there. But if we get through the bottom of this and begin to expand lower, then that just takes all of that off the table. And this becomes nothing. It won't be our higher low. It won't be recorded at all. And we'll still be looking for the low, whether it's going to be an equal low or a lower low or a higher low from this one, 67.50. So we just got to get it to play out. All right. So if we stay inside this range today, do not be shocked with that outcome. We're looking for explosive push outside of yesterday's range and a reason to keep it and get outside of Friday's range and then begin that expansion. Otherwise, level by level, let's just run it right back down. Right? I don't really care which way it goes because we got levels to trade either way. So what I got for you guys, be careful, be safe. I see y'all tomorrow.